Crypto crashes provide some of the best risk-reward opportunities for long-term gains. In this video, we're going to be talking about where I would be looking for the next major low on Bitcoin. With that said, welcome back to EllioTrades channel. I'm your host, Krown, again today. We got a fun one coming up as I want to reference a video that we put out here on November 26th, which was actually a follow-up on a video from about 9 to 10 days prior calling the dump from $63,500 to $53,000. And then this video, we went over this scenario right here. Now, I'm not doing this to toot my own horn or anything like that, but I do want to juxtapose this against some of the more fun YouTube thumbnails that we put out on this channel. Now, I actually do not have any hand in deciding the YouTube titles or thumbnails or anything like that. I just make the content. And of course, you know, I'm going to be wrong from time to time, but in this case, I want to just highlight the fact that if you just watch the thumbnails, you probably think I'm terrible and just the biggest turkey of all time. If you watch the content, however, well, I'm not going to say I told you so, because that's not just relevant to do in trading, but this was, you know, kind of what we were looking for in the past few weeks, now coming to fruition today. So I want to now bring you over to our charts here, and I want to talk about an analysis on the higher term timeframes, something that we alluded to not so long ago. This was maybe, I don't know, maybe like a couple weeks ago on a long-term analysis video. And what we were focusing on was essentially the double bubble fractal from 2013 and what we're looking at right here in 2021. So let me go over this rather briefly. And I want to also actually perhaps remind you that I have my own channel. There's a link in the description below. We've been, you know, talking about Bitcoin, of course, each and every day. So if you are interested in Bitcoin analysis, that'd be a good place to perhaps stay updated if you so desire. Okay, so what is this chart? Well, we like to put, or Bitcoin likes to put in its lows in the green zone, likes to put in its highs in the red zone, likes to put in its mid-cycle consolidations in the yellow zone. That's all you need to know. Of course, there's a deeper explanation than that, but we're not going to get into that today. And back in 2013, there's a lot of similarities to what we're looking at right now, where Bitcoin breaks above the green zone, puts in a mid-cycle consolidation in the yellow zone, and then zooms to the upside. And you'll notice during this, there was a very nasty wick to the downside right before breaking off to new all-time highs, respectively speaking. I mean, this was realistically like a month later when he got the new all-time highs, but a very scary dump right there to the bottom side of the yellow zone for about almost 27%. Keep that number in mind right now. And we're going to go back on over here, and you'll notice that Bitcoin doing something very similar. Consolidates in the green zone for a longer time. Of course, we do believe that the cycles are going to be a lot longer in accordance with that video, probably looking somewhere around middle of 2022 to end of 2022 is my personal opinion, which does imply that Bitcoin can spend a lot more time consolidating right here, which is exactly what I think it does. And once you break out of the green zone, mid-cycle consolidation in the yellow zone, which right now Bitcoin is testing the bottom side of the yellow zone. And from top to bottom, on a closing basis, we do see that this is about a 26.5% move. Now, we don't have the weekly closure just yet. It will be happening tomorrow at 7 p.m. Eastern time, but I do think that this is of some relevancy. Let's take this one step further and let's throw on some drawing tools. I'm going to throw on a Fibonacci extension based off of the 2011 to 2012 base right here. And let's just see if we notice any similarities between these two pieces of price action. And what do you know? Bitcoin bases off at the 1.272. We have a resistance, or basically the highs right around the 1.618. And the mid-cycle, or this mid-cycle correction on that wick down comes right at where? The 1.414. Okay, well, let's see if we have any similarities over here. And what do you know? Base 1.272, ceiling 1.618. Where is Bitcoin dumped down to thus far? The 1.414, and just about the same percentage losses there as well. Very, very interesting. So now let's package this into what this likely looks over the next, let's say a couple months, actually. I think that this is going to take some time. So let's go over here. This is the exact chart that we were looking at before. Disregard this. That is not what I think is going to happen, or at least unlikely, I should say. And what do we have here? Okay, so let's rehash first on what we spoke about in this video, just so that now you can see it in real time. And first and foremost, we saw multiple drives, 1, 2, 3 drives of bearish divergence come off the highs. that gave us the buys alongside the reversal formation right here, that below $63,500, we are looking for big dumps down to the green 55 exponential moving average, just this guy right here. Now, if you are looking at this strategy and the way that I play it myself, and the way that many other people probably look at it here too, you expect your uptrends to put in higher lows at the green 55. Okay, interesting. And for right now, on a closing basis, we would have a higher low, and also on a wick basis as well. That means this will be invalidated as a potential long-term bullish setup. Again, long-term, not happening today, nor tomorrow, nor even next week, or probably even this month, as long as Bitcoin is above about $40,000 on a closing basis, especially. And on top of that, Bitcoin would have what's called hidden bullish divergence on your weekly RSI if it can put in a local low here. So how would you confirm a local low? Well, again, very unlikely to happen this week, this coming week, maybe the week after that earliest, but you'd expect a stop and reverse point, basically anywhere above about 40, let's say 43,000 bucks, which could also come with a few more tests to the downside, by the way. In fact, I think that's actually perhaps rather likely, but we'd expect Bitcoin does hold that region. And at that point, we would have what's called a hidden bullish divergence, which is exactly what it sounds like, which is what you expect to have on your higher lows within the context of an uptrend. Okay, let's take this one step further and put these babies back on. All right, Bitcoin also corrected down to the 618 Fibonacci retracement between there and the 0.5. You do expect your pullbacks on the macro scale between $69,000 and $30,000 base to come within those regions. In fact, that's the last higher low came in right around here from a prior analysis. In fact, I can just do this for you really, really quickly. As you can see, there's your 618 low. Okay, beautiful. Anyways, all right. What else do I want to speak about before we move on? Lost my train of thought right there. Okay, so we got through that. Again, not expected anytime soon. Okay, and also what I want to be on record as saying is that this, as we've been saying, I think this was more on my channel, maybe not on this channel because it goes a little bit deeper, but we've been looking at this as one massive consolidation, and a massive consolidation at the highs is, generally a good thing. How would we confirm that this is a consolidation or likely to be a consolidation? Well, we expect volume to be trailing off from left to right since we got into the highs over here. It's exactly what we have thus far. On top of that, we expect volatility to be contracting. And what do you know? The dispersion of returns is contracting throughout basically since Bitcoin hit its highs earlier this year. Beautiful. So to put this into context, Bitcoin has actually rarely seen volatility levels like this on the monthly comparable to where we're at right now. The only time it was lower was in about May 2020. And other times when we were comparable, I would say was September 2015 and December of 2018, January 2019, essentially. What do all of these areas have in common? Well, here is May 2020, essentially calling the base of the last flu dump going from about 9,000 to 69,000, just about a year later. The time before that, December 2018 to January 2019, was on the lows over here at 3,000 before going to 14,000. Okay, what about the time before that? Again, coming out of the essentially September, August 2015 region before going from $250 to $20,000 just a couple of years later. Beautiful. Okay, so I think we've gotten through all of that. Now let's talk about timing on this, which is something that I think is a little more difficult to be done. But if we are running with the assumption, which again will be invalidated with any sort of a closure below, especially $40,000 on a weekly, we would expect, based off of this as a technical formation, which right now holds, and that is what I'm essentially basing this off of, that statistically speaking, formations like this is an ascending triangle, which is a reaccumulation formation, are most likely to break when they're about 70 to 75% full from their apex. Your apex is over here in about middle of 2022. This one's been going on for about, so this whole thing would be about a year. Where's 75% full or 70% full? Somewhere around here, which would be in mid to late January and at latest early February is when it's most likely to break. And as long as this does hold right here, and it does have higher lows, this does fit the bill of an ascending triangle. The volume signature is correct. The shape is correct. You're getting corrections down to the 55, exactly what we saw back on over here as well. And the volatility signature would also be correct. So that does imply we could make a measured move in this case, an implied target upon resolution, which resolution would be had with a weekly closure basically above our 65,000 rejective high. Let's just even say 60,000 bucks at this point is easy enough. Where would that be pointed towards? About $94,000 to $95,000 upon validation above that region. Again, in validation below 40,000, something new is completely going on, no longer available. We go back to the drawing board, at least I do. You are free to do as you will, of course. Now let's take this one step further. If that is going to be a target, we do expect, here we go. We do expect that it should have confluence with some sort of major Fibonacci pull right here. And what do you know? Actually, if we do this on a closing basis, it's going to be even better. And there we go. Yeah, closing base actually perfect right there. That would be directly in line with the 1.618, just around $94,000. So am I still bullish on Bitcoin macro? Yes, absolutely. Nothing's changed there. Am I bullish in the short term? Well, depends how short you're asking. I mean, Bitcoin's going to get its bounces, obviously, regardless of whether you're bullish or bearish. But for right now, as long as this does hold, I do run with that assumption. And that is essentially where I'll be leaving this video off. So again, this is very long term, not happening today or tomorrow, but for right now, does still hold and is actually my main idea going into early next year, in fact. Invalidated below $40,000. At that point, we're very likely looking at moves back down to 30,000, and we'll come back to it after that, of course. But for right now, I want to also point your attention towards yesterday's video, which again, if you read the thumbnail literally had like zero to do with the content. It's kind of funny. Like I get it. It's a YouTube game, right? And this just a game of YouTube. You got to be aware of it. But we were looking at Ethereum Bitcoin, and the Ethereum Bitcoin chart has great confluence on the macro scale with macro direction with Bitcoin, meaning that as long as this chart stays bullish, it has been wise and it has been relevant in the past from a statistical perspective that the rest of the cryptocurrency market stays bullish as well on the macro scale. Doesn't mean that we can't have dumps here and there, obviously. It's what we're seeing right now. But this chart is still bullish, and it actually went up today again. And we're about to have new highs today. This is just your next higher low. Beautiful. So it's just funny to read the comments from yesterday's video. It's like, that was about as right as it could be. What do you expect? Anyways, fair enough. I understand that people are going to have a knee-jerk reaction to something like that, and I drastically appreciate the people who actually happen to care enough to watch the content itself. But again, this chart's having a fresh breakout right here, and as long as that holds, it has been more relevant, statistically speaking, to be bullish on Bitcoin and the greater cryptocurrency landscape on a whole in the macro scale. We'll just briefly touch on it right here so we can follow up on it perhaps on a future video, but I'll do it just right here. All right, let's match up Bitcoin with the, let's put Bitcoin on log, with the orange line chart, okay? And then we have obviously the Ethereum Bitcoin pairing in the cyan chart, and you can see very obviously the reversals on the cyan chart correlate incredibly well, absolutely well, with the reversals on the macro scale with the orange chart, and by extension, the greater cryptocurrency landscape. So in this case, putting in new highs right here, I would still say that it's more likely long-term for Bitcoin to morph this into a reaccumulation formation. Can I be wrong in this? Absolutely. That's why we have invalidations. And with that said, I'll leave you right there. Hope this one serves you well, and I'll see you in the next one. Take care.